Key quarterly clues and unpacking Bitcoin's Doji dilemma. Hey guys, it's Keith Allen. Hope you had a good weekend. And well, what day is it? I don't even know. Oh, we're on Tuesday already. So the weekend's already come and gone. The monthly close and the quarterly close were yesterday. And now we're kind of, seeing how things develop from there. No surprise here. We're seeing a bit of a pullback here. September was a pretty solid month, and I think I want to start this thing out just by saying, like, I don't know if you recall, for anybody who's been in tune to the live stream for a while. First of all, thank you, and for anybody that's new, do me a favor and smash all the buttons: the like, the share a comment too. By the way, live chat is open if you want to chime in here today. The live chats comments are open on YouTube, yeah, we were talking earlier in September how there's always some sort of crypto bros narrative floating around, and it can be dangerous to follow. In September, it was like, watch out for the so-called September slump. September's supposed to be bad, and we analyzed the charts, dating all the way back to the beginning of the Genesis block for Bitcoin. And realized that there weren't really as many red Septembers in history as the crypto bros would have you believe. In fact, nearly half of them, almost half of them, were green. So yeah, there were slightly more that were red than were green, but there was a fair amount that were green, and so that kind of debunked the myth of the September slump. And of course, we finished with a green September candle, about almost 7.5% to the upside. So that debunked that myth, and now as we head into October, a month that the crypto bros affectionately refer to as Uptober, I want to caution you again, don't buy into the narrative blindly. You've really got to look at some other forces, at all of the other forces, and the broader narrative impacting the market before you make decisions just based on these buzzwords. Okay, so let's just have that in our back pocket here and know that we're going to look at actual charts and data to make our determinations and our assumptions, rather than just follow the crypto bros with their buzzword of the month. So, how did things transpire? How do we get to this point today where we're now seeing Bitcoin slide? We had a good, a nice rally in September off of a double bottom, and I'm going to just jump in and share that screen so we can kind of visualize what I'm talking through. And we reclaimed some important levels, namely the 200-day moving average and the 2021 mid-cycle top, which was just shy of 65K here, right here at 64,895 is where I have it on my chart. And so we had reclaimed these at the end of September, and then, well, we handily lost them. And this morning I got up and I saw we were still up above this 21-week moving average. I was happy with that. Losing that does not make me happy. Okay, this is obviously a sign of weakness here. But what's triggering this weakness, and where might we go from here? So in this analysis, we're going to look just beyond what we're looking at here on the shorter term time frames. We're going to look at the monthly and the quarterly closes and see if we can get some more clues out of that. Obviously, today there are a lot of different things percolating in the market. Okay. And TradFi had a red day as well, I should add. And if we click here, we can see that red across the board for TradFi and crypto here, right? So there's that. And I got a new chart here, just doing a comparison of the S&P and Bitcoin here. Also, obviously a bit more volatility on the crypto side than there is on the TradFi side. Nothing new there. It was only about a 1 point day for TradFi on the S&P. So there's that. Obviously, a couple of things impacting the market. or seems to be impacting the market, at least in the short term, is the tension escalating in the Middle East. There was talk, and of course, it's now since transpired that Iran launched a bunch of ballistic missiles at Israel. Israel and the U.S. collectively defended that attack. But obviously, that created some tension and some concern that, hey, how is Israel going to retaliate? Are they going to go after Iran's oil? And is that going to, cause a spike in oil prices? Well, that's kind of speculative for sure. But I think it's worth noting that, number one, the U.S. and Israel collectively thwarted the attack. Kind of a measured response rather than just full scale, all out attack from both sides. Number two is really not in anybody's best interest to go after Iran's oil. You can be sure that the Biden-Harris administration does not want to see that happen here. We're now a month away from the presidential election. So nobody wants to see that happening at this stage, or quite frankly, ever. So that is maybe tempered for the moment. Obviously, ongoing tension. No clue where it goes from here. Doesn't seem like we're getting any closer to peace in that part of the world, and that is deeply, deeply unfortunate. Obviously, hurricanes here in the U.S. Had a major impact here over this past week, with a lot of damage in the southeast here. Oddly enough, Florida, which was taking the brunt of the storm and the hurricane force winds, and of course the storm surge, obviously had some issues, but man, what's happening in North Carolina and Georgia also just absolutely devastating, and they are very, very far away from where the path of the eye of the storm was. So thoughts and prayers going to those folks. Not sure how much of an impact that had on the market. I don't think it was significant in terms of the market response. What is, however, significant is what's happening with this longshoreman strike on the East Coast, with port workers striking here for the first time in a long time. Their labor contract expired at midnight, I guess last night, and they're picketing today, obviously trying to get to a deal sooner than later. What are the implications of this? Quite frankly, think supply chain. Think COVID-related supply chain issues like we had back in 2020 after COVID, where ships could not come into port, where there was a bottleneck getting those ships to port and unloaded. Supply chain bottlenecks obviously have a trickle-down effect, a ripple effect through the entire economy, and that's something that we certainly want to avoid if we can. In other words, hopefully they can settle this. These two parties can settle their differences very, very quickly, because every day costs billions. The last number I heard is that it would take 5 days to make up for everyday loss. So every day that they're on strike and ships are not getting unloaded, it takes 5 days to recover from that. Doesn't take long to figure out what kind of supply chain bottleneck can occur in a very short amount of time. So hopefully the interested parties can come to an agreement sooner than later. That obviously is something that has economic impact and implications across the board. So that's certainly in everybody's best interest just to see that settled. Now, did those things trigger today's pullback, or was this kind of already in the charts? And for that, we're going to go to, I guess we could start on the monthly charts and see, let's see, that is the S&P monthly. And let's go ahead and look at the Bitcoin monthly. And we can see that, obviously we had a nice finish here on the month of September, but we're not getting, a great rally off the backside. In fact, things weakening. You can see S&P showing a down signal, a bit of a conflict here, I might add, Down signal on the trend precognition A2 plus algo, but the A1 looks like it's primed to potentially flash a new signal here soon. So this is something that's kind of questionable. Obviously, these are tentative signals, so a pump back to near the high of say 57.65 or so would likely invalidate this signal. And here on the Bitcoin chart, no new signal on the A2 algo, but we do have a new signal on the A1 algo. Same set of circumstances. So that signal's down here. You could see it better here on this chart, I think. Here we go. So again, these are tentative signals until the candle closes. So a push back down towards this double bottom would invalidate this signal for me. But it's indicating that price maybe isn't likely to go below that double bottom here. So that's basically what that signal is telling us. Can we get a new high out of this? Anything's possible. But I think that in the grand scheme of things, I've been saying for a long time, extended chop, and we've been getting the extended chop, and the whole world wants to know when are we going to break this extended chop. I've said as recently as last month that I felt like this could go through the election, and I think that is the case here. And the reason that I think that, well, another reason I think that is on the quarterly candle, on the quarterly chart, we have a classic Doji candle here. And Doji candles can be interpreted a couple of different ways. If they come after a extended trend, it could be signal a trend reversal. But if they come after a consolidation, then it could mean an extension of that same consolidation and potentially in that same path. And so I view what we've been dealing with as a consolidation because we have been trading in this range here for an extended period of time. Yes, it is slightly in a downtrend, but it's maintained a pretty tight range here. I mean, last month we had quite a bit of volatility. What did we trade? I think from that low to that high was about 26%, but we only ended with a 7% candle. Meanwhile, if we look at the quarterly, look at the range here on the quarterly candle. I mean, that was probably, I don't know, what, 40% or so? 45% of volatility through the quarter, but we ended with literally, look at this, a 1% gain on that candle. So that's classic Doge stuff right there. And this indicates that, the way I'm interpreting it, that we're potentially going to continue in this sideways range for an extended period of time. And like I said, I can very much see this happening through the election and maybe even beyond, because let's remember the transition of power. Are you listening? The transition of power, which didn't go so smoothly last time, by the way, happens on last time was January 6th. I imagine it's around that same date, if not a day or two above, depending on how the weekend lines up. But January 5th or 6th, I think, is when the president-elect will take office. So barring well, hell, everything is unforeseen at this point in terms of uncertainty about that election and that transition of power, of how that will unfold. So I expect that this uncertainty, this indecisiveness that the market is showing here, could continue through that time. So where do we go from here? Obviously we're looking at this breakdown on the weekly time frame, on the day, on all time frames, I guess. And this is, like I said, this is not good. The 200-day we had held for the weekend, but that failed on us. Now we've moved through pretty much all the moving averages. We've got one to go here, and we're testing the 50-day moving average right now. Can this hold? This is going to be a key inflection point. We're just sit here and watch this thing for a minute, because this is a key inflection point, in my opinion. If price cannot hold here, then I think that we've got potentially further to go. I would look here. Actually, the 50-week moving average is more important to me. I'm just wondering if that was going to be, kind of an early indication of what's coming. At this point already, I'm prepared to go here. I'm prepared to go to this double bottom actually. And if this doesn't hold, double bottom is the next potential target. With and then this third one would be the wick down to this what was really our local low, our lowest low so far here in this range, which was depending on what exchange you're on, 49K and change, 49.5 here on Bitstamp. I've seen it like 49.1 or 2 on some other exchanges. So whatever the case may be, approaching this lower low would potentially put us in the range of this trend line. And so those are things that I would be looking at. I've said all along that this trend line, in my opinion, is really the strongest foundational support that we have in the chart. So if we're to see a pullback, this to me would be the spot that provides the strongest foundational support for the next leg up. Obviously, breaking down from there opens up a whole nother can of worms, potentially the end of the bull run. Very last line of defense being the 200-week moving average way down here at the 39K, 40K level. And of course, we've been looking at this consolidation range since we left it back in February. So this kind of lines up well for me in terms of potential targets, just having the confluence between this consolidation range and this little bit of confluence here around 48 and the trend line. All of this would be reasonable to me. Is that the trip that I really want to make from all the way up here? Not necessarily. It's not, but not something I'm excited about. However, there is opportunity down here. Now, if Bitcoin is going to continue to consolidate in this range, and gosh, it's a wide enough range to have opportunities for traders in both directions. I think this also creates some potential opportunity in alts. Just want to duck back over to this daily chart here for a second to see how this 50-day moving average is faring under the pressure here, to see if we can at least maintain that. Can we maintain anything? And it looks like we're losing it as we speak, right? So real quick, I just want to look at something that's obviously been hot as of late, and that is Solana. Same thing. It's now also approaching that 50-day moving average. Will it be able to hold? Well, it initially has anyways. A lot of similarities between the Solana chart and the Bitcoin chart, namely losing these key moving averages. But some of the signs that I see in this Solana chart anyways that look at least a little bit better are the fact that one, we're at the moment still above the 50-day moving average. Two, still above the trend line. Three, above the 0.5 fib, still within the realm of the golden pocket here. You can see there was a rejection. So might we get up there and get another shot at it here at the 618 fib here before it's all said and done? That remains to be seen. That's kind of what I'm watching here at the moment. With that, I think I'm just going to take another glimpse back here on the Bitcoin chart, and then we'll look at the order book real quick on Fire Charts and see how things are shaping up there. As you can see, price is diving into liquidity here, right? So this obviously is a pullback that creates some opportunity. The question is, where do we land? Where's that bottom going to be? Let's get a quick refresh on this and maybe zoom out a bit and see if we can identify something, because we just as we are speaking about this, are coming through some support here at the 60,500 range. Now 60K coming into range, and we're about to go sub 60K. You can see there's not a lot of bid liquidity holding this up here. So where do we go? Let's zoom out and see what the monthly looks like. You can see price coming through this bit of liquidity here. We have another dose of it around 58 for a potential bounce. Another block at 55, and then we're down to that 50K range which really, let's just say it really needs to hold. If you've got bullish dreams, that really needs to hold. Now, again, this isn't, in my opinion, all solely based on what's going on in the Middle East or the longshoreman strike. I think there's really the sum of all parts happening here, including the fact that the charts were really kind of lining up for this, even without those geopolitical tensions and the domestic tension happening here in the U.S. So. Um, I think we're in store for more volatility, which is a good sign for those of us who are traders. And I think that potentially we could see a pullback, but I'm hoping that price is going to hold above this double bottom here, maybe potentially form a triple bottom. And if it doesn't, I'm moving down to the trend line as a potential bounce here. If things break away here, it very well may be over in terms of this bull run. So with that, I'm going to wrap it. We'll take another look with fresh eyes tomorrow and see how things continue to develop through the week. But I just want to caution you before you panic and start hitting buttons, or before you buy into the Uptober narrative, really take a hard look at what's going on here. Know what your invalidations are. Stick to your plan. Know your invalidations and manage your risk. Simple as that. Hope that helps you out. At least gives you some things to think about as you move into the last quarter of the year, which historically has been good. But we've got obviously a pretty interesting playing field of play, if you will, with a lot of dynamic changes happening on the daily. So let's keep in tune to this thing together. Hope this helps you out. If you like the streams, do me a favor, smash all the buttons. Another reminder, hit that like and definitely hit that subscribe button so you don't miss any of these lives. Thanks again, guys. I appreciate the support. Make it a great day. And as always, trade safe, my friends.